Hello traders, you're welcome to this video. In this video, we are going to be discussing how to trade channels in Forex. Okay, how to trade channels in the Forex market. So basically to trade channels in Forex involves, it's not too hard, it's not too complicated, but just involves a couple of things that you need to be aware of. And we're just going to be looking at some simple steps on how to identify both bullish and bearish channels, okay, and how to spot breakouts and how to ride price action. All right, so let's get right into it. So first of all, the first thing to do is to identify the channel. Okay, a price channel consists of two parallel lines which are support and resistance, okay, that the price moves between. Okay, now there are two types of channels. We have a bullish channel which indicates an uptrend and a bearish channel which indicates a downtrend. Okay, so now let us look for a bullish channel to start with. Okay, a bullish channel is a channel in which the price consistently makes higher highs and higher lows consistently makes higher highs and higher lows. Now we have a channel here, although sometimes these channels might not be perfectly smooth, perfectly parallel because of could be situations of false breakouts, or it could be situations of, let's see, because you can see in this case there was actually higher highs. As we can see, it was actually higher highs. It's just the regularity was not, how do I put it, you can see that it was not, the price did not always get to the trend line before reversing. In this case, you see, in this case, but it was still forming higher highs and higher lows, you can see. So we can still consider this a bullish channel. Okay, now as for a bearish channel, the price is consistently making lower highs and lower lows. You can see we even have another channel, bullish channel here. We have another bullish channel here because of the consistency of higher highs and higher lows. Let's look for a bearish channel consistently making lower highs and lower lows. Oh, this one is now beginning to look like a divergent triangle. Let's just look for one that is more parallel. Okay, yeah, this one looks more parallel to each other. Okay, this is somehow perfect. So you can see that we're having consistent higher highs and higher lows. This forms a bearish channel. Okay, so basically drawing the channel is very easy. You just need to connect two or more swing lows in a bullish channel or bearish channel, yeah, or two or more swing you need to connect two or more swing highs in a bearish, swing highs and swing lows in a bearish channel, and then for a bullish channel you also need to connect two or more. This is a bearish channel, right? You can see connect two or more swing highs and two or more swing lows, but it's going in the downward direction. Then in the bullish channel you just need to also connect, did I remove this? You also need to connect two or more swing highs and swing lows, but this one is going in the upward direction. Okay, all right. Now, how do you spot key breakouts? Breakouts occur when the price closes decisively outside of the channel. Okay, decisively outside of the channel. This could signal a reversal or continuation of the trend. Okay, so now in this case we can see that we had a bullish breakout. The price closed decisively outside, and remember what we talked about concerning breakout, there is usually a retest. So we can see that price even retested the channel, the upper boundary of the channel, which now turned into a support. level, okay, and then we can see that the breakout, sorry, the breakout was valid. Okay, so in a bullish breakout, if price breaks and closes above the resistance line, just like in this case, can signal a continuation of the uptrend. It's a bullish breakout or a new bullish trend starting. Then in the case of a bearish breakout, price will have to break out. You see, in this case, there was no very notable retest that happened here. But let us look at the smaller time frame and just to check if there was a retest on the smaller time frame. Let us check if there was a retest on the smaller time frame. Because in some cases you might not see the retest very obvious on the time frame where you entered your trade, or where you are making your analysis, or you might not really see the retest very notably on that time frame. So okay, we can see that after the breakout happened, there was a little bit of an upward movement. Can we see? Although the price did not exactly touch the trend line. So you can see that in the smaller time frame, there was a little bit of a retest before the bearish move continued. Okay, so this was a bearish breakout. Now, false breakouts, let us consider false breakouts. It happens when price breaks out of the channel only to re-enter. And that's the reason why it is important to wait for a retest. Even if the retest does not exactly touch the support or touch the resistance in the case of a bullish breakout, it is important, touch the resistance in the case of a bearish or touch the support in the case of a bullish. It's important that price gets at least close to it and continues. Okay, because a false breakout, after the breakout happens, the price will just go back into the channel. So you have to confirm your breakouts. Okay, you have to confirm them, wait for a retest and a continuation, from with the candlesticks, right? Now, step 3, riding the price action. Okay. Now, in a bullish channel, you want to enter long position when price touches the support, okay, and begins to rise. So you just target the next resistance for your take profit. Basically, you target the next resistance for your take profit. You set your stop loss below the nearest swing low. The resistance is your take profit. And then for a sell that is in a bearish channel, okay, yeah, this is it. So in a sell for a bearish channel, all you need to do is you enter short positions. Remember that it is good to trade in the direction of the trend. That's the reason why in a bearish channel we should be looking for sell opportunities, and in a bullish channel we should be looking for buy opportunities, right? So now you enter short positions when price touches the upper boundary of the channel, and you target the support level, the dynamic support as your take profit. Set your stop loss above the nearest swing high. Basically, that is just it. Okay. Now, if you want to trade breakouts, just after the breakout happens, you confirm the breakout with a retest. Okay, and then when the next candle becomes in the direction of the breakout, you can then enter your in this case is going to be a buy. You enter your trade, you set your stop loss below the breakout level, then you can target the nearest. It could be resistance, it could be horizontal resistance or horizontal support. In this case, target it for your exit. You can use that, you can use other indicators for additional confirmation. Now, it is important that you use indicators for confirmation, but it's not like the price action does not work on their own, but using indicators can add to your accuracy, okay, effectiveness of the signals, okay. So you might want to try out other indicators. You could use RSI, MACD, moving averages, and the rest of them just to confirm the strength of a breakout, okay. You can also use volume indicators just to confirm spikes. All right, now in terms of management of risk, it's important to place your stop loss orders outside the opposite side of the channel or beyond the breakout point. Like I already said, okay, if you enter a sell, for example, in a bearish channel, your stop loss should be outside the channel. Don't put your stop loss in within the channel. For a bullish, for example, also place your stop loss outside the channel, not within the channel. Your take profit should also be with your, while your stop loss should be outside the channel, your take profit should be within the channel. Okay, yes. So when you enter your sell, stop loss should be outside the channel, take profit should be within the channel, because the take profit is where you're anticipating price to get to, whereas the stop loss is where you're not anticipating price to get to. So you get the point. All right. So by mastering these steps, you'll be able to trade forex channels effectively, capitalize on trends, and make smarter decisions based on price action. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Thanks for watching. Happy trading.